Let's turn our attention to the cement space then. We have with us Arun Shukla, President and Director at Lakshmi Cement, who joins us on the show. Well, we're going to be focusing on three main points: the impact of GST rationalization, demand trends and the outlook on cement prices, and finally, what's on the company's radar? They want to expand, but is there any inorganic plan on their radar? Well, let's get straight to Mr. Shukla. Hi, sir. Good morning. Thanks a lot for joining in. First up, GST rationalization. I've been hearing this for the last, many years from the time GST was implemented, that cement companies wanted lower GST rates. Now, that's going to happen in all probability. What's your initial reading? Prices will come down to an equivalent amount. Is that correct? But it could help volumes at the margin.
Thanks for having me here today. Yes, of course, I think GST reduction has been one of the demand of our industry for so long. Definitely, it is going to improve demand position in India for sure, and that is going to benefit the cement industry. But I think we need to really wait for some time, because October is still, 2 months away. But yes, we are quite bullish about it. And of course, I think though cement demand is not that, price elastic to a great extent, but still, I think there is going to be uptick in demand with the rationalization of GST.
Okay, so you're optimistic on that front, because otherwise cement cost as a percentage of making a house, it's very, very small. And as you said, demand is mostly inelastic. Since you're expecting a volume push, and the first quarter actually you grew by close to around 9 to 10%, which is better than the industry. For the year, what kind of volume growth are you looking at? And in your core markets, what is your current market share? Around double digits?
Yeah, we are into double digit in our core market. All markets, we are into double digit. And of course, I think last quarter has been good for us, double digit growth. And as I told you during last conversation also, we are going to grow at a higher rate than industry. And hopefully we are going to maintain this, growth trajectory going forward as well.
So for the year, industry is expected to grow at, I think, around 6 to 7%. Very roughly. You will grow by what?
Definitely, I think, a little more than what industry is going to grow at.
Fair to assume that you'll grow by at around 9%, sir, for the year, volume growth?
I think definitely we'll grow higher than that. And first quarter has been in double digit. Yeah.
Okay. All right. What about pricing, sir? After many quarters, last quarter, there were some signs that pricing is holding out after many dull quarters. What is your estimate in terms of prices moving here? And also premium products, as you had told us last time, you want to gradually increase it. Yeah. As a percentage of trade sales, how much does it go to?
Yeah, so on pricing, I think pricing, yes, though I think we are through a cyclicity of demand, September is typically low in case of cement industry. But still, I think prices are sticking little bit here and there, but more or less, I think price situation is better than last year. One. And second, as far as our premium cement goes, we are quite bullish on that. Our plan is to go to about 27 to 30% in coming months and years. And that is what we are working on. And just to let you know, in some of the market, our premium product proportion is more than even 30%, 35%. Okay. But there are some markets where we need to improve, which we are working on.
All right. Mr. Shukla, I'm going to revisit the operational performance, but let's clear some of, the buzz out of the air. Are you looking at the South-based company in terms of inorganic growth? Because as of now, you'll have exposure North, Gujarat market, I think East market as well. Are you looking at some inorganic growth in South India? And let me narrow down as well. Could it be Deccan Cement?
So as I said before, our strategy is to really focus on inorganic organic growth, right? And that is what we have been doing. And we have announced some capacity expansion in eastern part of India. And our plan is to go to 30 million ton by 2030. And as I said before, I think there is nothing, no inorganic, opportunity which we are working on as of now. But as I said, I think if some asset which is strategically fitting into our overall direction, then definitely we'll look at that. But as of now, I think there is nothing which I can really disclose.
But have you all studied Deccan Cement?
No, I think we are not working on any acquisition as of now.
Were you all working earlier and that deal seems to have fallen through?
As I said, I think we are not averse of acquisitions, but that has to really fit into our strategic direction one. And definitely, I think value acquisition. We will not just go just for the sake of, having some acquisition. No.
So at what value would you like to go in for inorganic growth? What is the EV per ton should be for you make Mr. Shukla and the team at JK Lakshmi Cement excited enough to go for it? If you're doing inorganic growth, what should it be?
So I think the trend. As I said, I think again we have to really evaluate all facet of it, right? We cannot really put a value to it, but definitely I think that has to add value to our overall strategic direction. And yeah.
Okay, all right. It has to be strategic in nature. That said, you're currently around 16.5 million ton and you're headed towards 30 million ton.
Yeah.
With what all you've laid on the drawing board, by FY 26, 27, 28, how does this capacity scale up? By 28, what will the capacity be?
So in the next, by 28, FY 28, we'll be adding about close to 4.5 million ton.
So you'll be approximately around 22, 23 million tons. Is that correct?
Yeah.
So that's 7 million tons and that's a gap. That'll mostly be organic in nature?
So it's all organic. Whatever plan we have, 30 million ton, is all organic in nature.
And there was some delay in the expansions, right? Are you confident now that those expansion plans are back on stream? There won't be any further delays?
Yeah, that is back on stream. No issue on that. And probably, I think, within a month or so, we'll be there at 18 million ton. So the plant expansion is already almost on the verge of completion. So
yeah,
18 by that time.
And the Durg plant that in East India, that starts getting commissioned by when?
Yeah, so we are targeting FY 27, and that is what I told you. In the next 2 years, I think we'll be adding at least 4 million ton.
And debt is currently around 1,400 crores. Where does it move to since you have an ambitious capex plan?
Yeah.
Where will it go, sir, from around 1,400 crores?
So you are talking of debt?
Yes.
So debt equity ratio, I think net debt equity, I think is going to be within 2.5. This is what our threshold limit is.
All right. Final question then. EBITDA per ton, you've done quite well. First quarter was actually much better than what you're guiding for. Yeah. For the year, give and take the volumes, the pricing, as well as cost, because you've been focusing on the cost side as well. What will be the range that you'll be happy with?
I think our endeavor is to reach to 1,000 rupees per ton EBITDA by end of this year. So this is one. Second, I told you that volume growth, we are quite optimistic. We'll be growing better than industry. Second. Okay. And third, on cost front, a reduction of about 100 to 150 rupees a ton in the next 18 to 24 months' time.
Well, we appreciate you joining in, sir, and giving us clarity on on how JK Cement is looking at things ahead. You want to outgrow the industry. EBITDA per ton moves to around 1,000 rupees per ton. And as of now, you're telling us that there is no inorganic growth on the anvil. Thanks a lot for joining in.